Hello, traders. Gary Wagner here. Just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the island. 30th day of April, 2021, and this is the daily report for gold and silver. On today's weekend review, we will cover gold, silver, along with copper, as well as Bitcoin. We will detail our studies to tell you what our current forecasts are. Our show begins now. Gold futures, basis the most active June contract, closed fractionally higher, trading up 50 cents today, and currently fixed at $1,768.80. Although it has closed lower for the two last consecutive weeks, it is showing a gain during the month of April. This first chart is a daily candlestick chart of gold futures. We have a short Fibonacci retracement starting at the end of March when gold was trading at approximately 1675 up to these recent highs when gold attempted to take out $1,800 per ounce. What we can say is that the 21-day exponential moving average has definitely been a supportive area, at least on two of the lows this week, including today and Wednesday, although yesterday's low definitely hit a new low, one not seen since this massive move a couple of weeks ago, Thursday. That also hit our stop, which was sitting at 1760. We went long at 1744. We got out at 1760 for a profit of $1,600 per COMEX contract. We remain flat with no active trades going into the weekend in either gold, silver, or copper. We're looking at a longer-term daily candlestick chart of gold futures. We can easily identify the double bottom that occurred in the beginning of March and the end of March. That is when gold was trading to a low of about 1680. However, ever since breaking above the 50-day moving average, and that occurred in the middle of the month, middle of April, we have really seen sideways trading with a defined bias to the downside. We can see that by a series of lower highs as well as lower lows. Nonetheless, we can note that in terms of the trading range, it has been defined by the 100-day moving average as a resistance area and the 50-day moving average as a level of support. Gold's fractional gains today were extremely respectable, considering the solid gain in the dollar index, up over 0.75%. That's plus 70 points, currently fixed at 91.29.5. We're looking at a daily chart of the dollar index. We can see that the dollar absolutely hit its highest trading value right at the beginning of the month. Dollar had a fixed value of about 93.50. We saw a pretty consistent slide to lower pricing, actually hitting a low between 90.25 and 90.50, closing just above 90.50 yesterday, and a tremendous 0.75% surge today, taking it above its 100-day moving average and just below the 21-day exponential moving average. If we see dollar strength return, it would have to remain above 91 on the dollar index. Silver futures lost approximately 10 cents in trading today. It did close below $26 per ounce. However, we find support at a cluster of moving averages, including the 21-day and 50-day exponential moving averages. Without any question, silver has been in a narrow and defined trading range over the last 2.5 weeks in trading. We can see that on this daily candlestick chart and recent activity. Also, we spoke about the fact that the supportive area on a technical basis seems to be a cluster of moving averages, which include the 50, 21-day, as well as the 100-day moving average. Silver remains in bullish alignment. However, it does appear as though many of these moving averages, specifically the 50-day and 100-day, appear as though they might cross to the downside in trading next week. In terms of support and resistance levels, major support comes in at $25.15. That is the 61.8% retracement level. Major resistance at $27, with short-term resistance just below that, based upon the series of recent tops that have come in at approximately $26.70. Lastly, copper futures remain exceedingly strong, and even with the decline over the last couple of days, is trading above $4.45 per pound. Traders, we are looking at a daily chart of copper futures. We can clearly see that since October of last year, when copper was under $3 a pound, we have seen a dramatic rise, at least 25% from those lows to well above $4 per pound, currently tracking at $4.45 per pound. With the all-time high at approximately $4.65 a pound, myself as well as other analysts believe that demand is exceeding supply, and we should see copper go to an all-time new record high over the next couple of months, and that is why we are looking to properly position ourselves long in copper. After pulling profits this week in gold futures and Forex and last week on our silver trades, we will remain flat going into the weekend to look to position ourselves for the next move in gold and silver. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Have a great weekend. Bye-bye.